welcome to this module inside of My Money EDU, the income shifting blueprint. And this is by far going to be one of the most powerful modules that you will go through in this particular library and blueprint, and also membership, only because I'm going to show you exactly how you can increase your cash flow step by step in a legal, ethical way without going out and trying to get an extra job, working a part-time side business, or doing anything else crazy, just doing what you're currently doing. And then also, once you understand how this works, we're also going to break down the process of taking this newfound cash flow and using it to pay down debt, increase your credit, increase your savings, create passive income, and or start a part-time business if you choose to, which we will cover in other modules throughout this particular course. All right, so just go ahead and take some notes, and we're going to go ahead and get started. So right below this video, you're going to see some really important forms. The first form is going to be big refund, big tax bill. You're going to want to download that. Then we're going to have a copy of the W-4 form for 2017. The one for 2018 has not come out yet, but it should be about the same. And then we're going to have a 1040 form. So these forms are very important because they're going to help us identify specific places for information to make sure it's correctly filled out. So this is the first document that you're going to see. It's called Big Refund, Big Tax Bill. And it's a little old, but what the IRS was saying is first, some refund facts. Federal tax refunds to individuals total more than $215 billion last year. More than 101 million taxpayers got refunds. That's 80% of people in the United States. And the average refund in 2005 was 2126, and it was essentially saying then that it was about $40 too much per week that you people were overpaying in their taxes. And because of inflation and cost of goods going up, and then also because of salaries have increased, this amount has actually increased over the last 12 years as well, money coming out of out of other people's paycheck. Now, here's what it's saying. Where does your refund come from? It comes from your wallet or purse. When you tell your employer how much to withhold from your paycheck or make an estimated tax payment, that's what it's basically saying. And it says you might be using extra withholdings as a forced savings method, but Uncle Sam doesn't pay interest on refunds except in special circumstances, which most people don't qualify for those circumstances. So putting money in any type of savings account or paying down debt obligations will or might be a better option. So what are they saying here? They're saying stop giving us your money because if you give it to us, we'll take it, but we're not going to pay you any interest, and you're probably better off putting it in a savings account or paying down debt. And then depending upon your situation, you might even be better off paying down debt because even some savings accounts, which we'll discuss in another module, aren't even getting a really good interest rate. All right. So this is very important to set the tone of this training because the IRS is literally telling you that you're overpaying in taxes. Okay. Now, what is the W-4 form? Right? Why is it so important? Well, the name of the W-4 form is the Employees Withholding Allowance Certificate. It is your responsibility to ensure that this is filled out correctly. So many people who start their jobs, they don't necessarily get training on how to correctly fill out this form. They just kind of just fill it out and just turn it in, and and that's that. They're just so excited they just got the job. So once they turn it in, they typically don't review it. Now, I have this here, and there's a W-4 form for you to fill out for if you need to readjust yours so you can turn to your HR department. But there's a part on the W-4 form that explains the purpose. And I'm going to pull that up real quick just so we can see. So it says right here, the purpose, right, is to complete the W-4 form so that your employer can withhold the correct amount of federal tax from your pay. Consider completing a new form each year when your personal financial situation changes. Now, here's the unfortunate truth. If you're watching this, then you're being educated, but many people who work their jobs, they don't even change this, right? They don't look to change it. things change in life. They may have kids, they may get married, they may get divorced, they may start a business. All types of financial things change on a yearly basis, yet and still, many people aren't correctly filling out their W-4 form to reflect those changes, which in turn is having which is causing additional money to be withheld from their paycheck. That doesn't necessarily have to happen. So two main reasons people overpaying in taxes, right? They don't revisit the W-4 form and make those adjustments based off their lifestyle, and they don't fill out their personal allowances worksheet correctly. So the first reason I was just hitting on, but then the second reason is just because of just lack of information, lack of education, and they just are inaccurately filling out their W-4 form. So in a typical situation, right? What you will want to do is look at your personal allowances worksheet and make sure that this is filled out correctly. Now, many people have looked at this and filled it out incorrectly. So let's just look at a typical family example so I can bring this home and make it all make sense. So we'll look at a married couple with two children. We'll just say they have a combined income of $80,000, and then their child care expenses are $3,000. Okay, so typically the mistake people are going to make, well, in this scenario, well, I mean, I've got four, right? Because it's me and my wife, and then my two kids. That one, two, three, four. That's four. So what they'll do is they'll take that and put that as their um, allowances, but there's a difference between allowances and exemptions. That's not what the W-4 form is asking, right? The W-4 form is not asking for your exemptions. Your exemptions is found on your 1040 tax return, right? Your allowances is not on your W-4 form. So when you do your 1040, this is when you fill out your tax return every year. This is where your exemptions are held, okay? And typically, when you're doing your exemptions, there's three types of things to consider, or three reasons that's considered an exemption. That's yourself, your spouse, and then your dependents, okay? And in that scenario, they would have four exemptions because it's a married couple. They're including themselves and their two children. So, yeah, that is correct on the 1040 form. That is not correct on the W-4 form because that's not what the W-4 form is asking, right? The W-4 form is asking, what are your allowances? So, what I'm going to do is I'm going to pull up an actual W-4 form and fill it out with you based off this scenario so you can have a clear future in terms of how the W-4 form is going to work. All right, so if you just go to Google and you Google W-4 form, it's really easy to fill out, and then I'm also including one in this particular training so you can refill it out, turn it into your HR department as well to ensure that this is filled out correctly. So what you want to do is just look at this, this personal allowances worksheet. All right. Now it says enter one for yourself if no one else can claim you as a dependent. Well, in this scenario, we would need to put a one here. Then it says in B, enter one if you're single and have no and only have one job, or you're married, have one job, and your spouse doesn't work, or your wages from your second job or your spouse's wages or a total of both are less than $1,500. So that's not the case in this scenario that we're using here with the married couple. So we will put zero there. Okay. Then it's going to say enter one for your spouse, but you may choose to enter zero if you are married and have either a working spouse or more than one job. Entering zero may help you avoid having too little tax withheld. Now, sometimes when people read this, that may trip them up because they're like, well, I want to make sure I fill this out correctly. Well, here's the litmus test. If you had, if you received a tax refund last year, by definition, you had too much tax withheld. So what you would want to do here is enter in, I would say, a one because you essentially don't want to have unnecessary taxes withheld. Now, if you had to pay in tax, last year, then you would enter a zero here because you ended up overpaying in taxes, which will show you a strategy to ensure that doesn't happen. So that's the litmus test. If you received a refund last year, you want to go ahead and enter a one there. Then it says enter number of dependents on line D. Enter number of dependents other than your spouse and yourself you will claim on your tax return. Okay, well, they're a married couple with two kids, so we're going to put two here because they're going to be claiming two kids. All right, then in line E, it says enter one if you file head of household on your tax return, see conditions under head of household. Now, here's the thing, and this is specifically for all the fellas, right? There's no doubt in my mind that you are the head of your household. Okay, no question about it. All right. However, according to the IRS, you may not be head of household from a tax perspective, and that's really what this means. So if we look at what head of household means, I have it pulled up here. I'm going to pull it up just so we can see it. Head of household basically means generally you can claim head of household filing status on your tax return only if you're unmarried, which is not the case because they're married, and pay more than 50% of the cost of keeping your home for yourself and dependents, right? So basically, in this scenario, this married couple wouldn't claim head of household, or the husband would not claim head of household on their tax return because they're not head of household based off that definition. So we would enter a zero here, okay? Then it's going to say in line F, enter one if you have at least 2,000 or more in childcare expenses, which you plan to claim a credit. So based off the scenario, if we look at the married couple, they are paying $3,000 in child care expenses. So we would enter a one in this scenario because that's what they're paying. All right. So that's based off what it's saying. Then it says child care credit. So essentially, if your income will be less than 70,000 as a single individual, or 100,000 if married, enter two for each eligible child less one. So we would enter two for each eligible child. If you have two or more children, enter less two. Excuse me, if you have two to four eligible children, or less two if you have five or more. So what is this saying? It's saying to take 2 plus 2, which would equal 4, less 1. So 2 plus 2 is 4, minus 1 because they only have two kids. And then what we would get here is 3. Okay? So what we do in line H, it says add all lines A through G and enter that total here. Note this may be different from the number of it is right here in black and white. Note this may be different from the number of exemptions you can claim on your tax return because an exemption is different than a personal allowance. So 2 plus 2 is 4. I mean, 1 plus 1 is 2, plus 2 is 4, plus 1 is 5, plus 3, that's 8. Okay? And that right there is how you correctly fill out your W-4 form based off your particular tax situation. So here, you see it right here. I want to bring all this stuff home, right? The purpose of the W-4 form is the employee's withholding allowance certificate, right? You are empowered to ensure that this is filled out correctly. It is your job to make sure that this is filled out correctly. So once you have filled it out, you want to turn this into your employer or your HR department, fill it out with your information, sign it, and then send it in. So in the next video, I'm going to cover the back of the W-4 form and talking about deductions and allowances and adjustments. So go ahead, pause this video, take action with this. If you feel as though I think you probably should stick around and watch part 2 of this video because I'm going to break this down as well. But if you do not do this right here, at the very least, you will see an increase in your net take-home pay. I would conservatively say between $200 to $800 in the next 30 days. Okay, and you didn't ask for a raise, you did not ask for more hours. All you did was get the money that was due to you without having to get a refund at the end of the year. Okay, so I will see you in the next video.